I hope that I am audible. Okay. Hello everyone. Okay. Hello everyone. Welcome to Oliveboard. I hope you all are fine and doing well. So in today's class, we are going to start our second capsule batch class in which we are going to complete module A next 3 chapters. Okay. And I am hoping that my screen is visible, I am audible, everything is okay from my side because I checked that everything is fine from my side. And please confirm once that everything is okay so we can start the class without any problem. So in today's class, what we are going to do, we are going to cover the next 3 chapters. Okay, so let's start. Okay, today we are going to discuss about letter of credit. See, what is the letter of credit? If I say this is type of a agreement between two parties. Basically, one party is called importer and second party is called as exporter. Like buyer and seller type of agreement. Why this letter of credit is there? Because suppose there is an buyer who is in India, or there is a seller who is in USA. Now they want to do business. They want to Indian buyer wants to buy something from USA, but USA seller wants to also send the things to the Indian's customers. But there is a problem of trust between them. What is the problem of trust between them? That what happens if a seller sends the good and did not receive any type of payment? Or what happens if Indian gives the money, gives the payment, and seller did not send any type of good? So for this type of situation, for tackling this type of problem, letter of credit is there, a type of agreement is there where all the terms and conditions are written, where all the things are written, and due to these terms and conditions, okay, due to these type of conditions, they can do their business easily. Okay, so it is a document basically which is issued by the bank that guarantees that you do business. Seller and the letter of credit gives guarantee to the buyer and seller that do your business, don't worry about the payment, we are here to give you the payment. So this is a document which is issued by bank that guarantees payment to a seller, and provided the seller presents the required document. If seller says that these are the required documents, Okay, then payment done. Okay, so this basically used in that international trade because the trust issue problem is there only. So it gives assurance to the sellers that don't worry, you will get your payment, and also shipping assurance to the buyers that you do payment, no worries about the goods, you will get your goods. So it is like a middleman between buyer and seller, and these things are handled by the buyer's bank and seller's respective bank. So it is act like a middleman between buyer and sellers. So why UCP rules are there? Why they have to follow the rules? Because there are so many rules they have to follow if they are doing as a middleman for buyer and seller. So obviously rules will be there. So both the parties have to follow the rules, and these rules are uniform everywhere. Means these rules are same for everyone. That does not mean in India rules are different, in USA rules are different. So that thing makes very complex situation very complex. So everywhere the rules are same. These rules are created by the ICC, International Chamber of Commerce, which is in Paris, and this is established in 1999. Sorry, 1990. So this thing is important. Where who created these UCP rules? ICC created these rules in 1919. These rules are known as UCP, that is Uniform Custom and Practice for Documentary Credit. Currently, there are 6 revisions already done, and the sixth revision is UCP 600, which is effective from 1st of July 2007. And the next revision will be whatever, whenever that revision will become, the revision will be UCP 700. So let's see with the history of the UCP. UCP 82, that is the first version, comes in 1933. You can see the trend of international banking, international trading is before our independence. So in this, what banks, okay, I am there, I will check all the documents carefully. They tell the meaning of owner, beginning, middle, end of the month, and if anything happens on the holiday, the date extends to the next working day. That is usually happens in the case of bank. No bank responsibility is there if document is not good, document is uh, uh, saying the double meaning type of situation. So in that case, there is no responsibility for the bank. This is according to the UCP 1990, UCP 82 1833. This is the first version, but some more improvement come. Then that improvement is in UCP 151. So that 151 means the year is also 1951. Here they use applicant, they use some more advanced English, applicant instead of principal. They says that okay, let's introduce payment, acceptance, negotiation, purchase. They basically in this case bank deals with the documents, not the goods. They means banks have to have their meaning with the documents. That document should be perfect. Okay, and also invoice must be there in invoice, everything should be mentioned about the credit, about the goods, about the shipment, everything there is there in the invoices. This is according to the UCP 1951. Okay, then next one, UCP 222, that is in 1962. Now, UK and Commonwealth Bank saying, I am adopting this revision. Why? Because here credit is become independent. Credit is not depend on any type of sales contract. And banks are negotiating. Banks can do the things without any type of conditions. They will put their things in front of everyone. Rules here uh, for the beneficiaries, they can't replace any type of documents. Documents have their own importance from the very first revision, from the very first rules. They have their own importance. For banks, documents are very important. Then 290 is saying, okay, let's introduce the term nomination. Let combine the rules for combined transport and assignment of proceeds. And here after happening all the things, after happening a shipment from the seller's end, they bank gives them 21 days that produce the show the document, show the transport document, then we will assure you, we will give you the payment. Once you will provide the documents, we will give you the payment. Once the documents are verified, after that payments proceeded. Then there is one rule, that is UCP 400. Every concept is new there. Now there are some articles for the documents, there are the articles for the bank to bank reimbursement, there are the article for the transshipment. They define the meaning of transshipment, they says about the transshipment, and you will see in the incoterms that what are the obligations of sellers, what are the obligations of buyers. Then UCP 500, very popular. This revision become very popular and become popular by the practitioners, means who are dealing in the foreign type of transactions, they are who are doing the international trade. So this revision becomes popular between them. In this, credit is irrevocable. Okay. And if credit can't be authenticated, if any situation is there, in that case credit is not authenticated, so bank have to bank must notify it that credit is not authenticated. In this, from 21 days the limit is reduced to verify the documents, that becomes 7 days only. Okay. Or non-documentary condition is completely ignored, because as you know that from the first revision, documents are very important for banks. And rules are there that who are signing the transport documents. Either if buyer receives the goods, is he or she signs the document, or the seller signs the document, that thing also verified by the banks. Then the current version UCP 600, which comes in 2007, it is aligned with the ISP 98 rules. There are some new definitions, new interpretations are there. It remove all the mentions of revocable credit. What do you mean by revocable credit? Revocable credits, like some, like if two persons are agreed on something, okay, but seller wants to change the terms and condition. So in that case, seller changes the conditions and did not notify to bank, did not tell to the buyer. So this creates very untrust type of situation between buyer and seller. This leads to the conflict. So that's why revocable credits are completely banned here. If any documents are lost, then there are some rules for that type of situation. They reduce the time, see, 21 days to 7 days, then this 7 days to 5 days, only 5 days now banks have to verify all the documents. If the credit is silent, then document have to fulfill their purpose. And there are also new ways, if any document is different, means if any document is in default, any document is in problem, so there are new ways to deal with these documents. Everything is mentioned in these rules, that how to deal with these types of documents. Okay. Then, so if you are buying something from a big country, like if you are buying a very big thing, suppose any type of machinery, any type of goods which are very big from the another country, like machine, car, and lots of goods, so obviously you don't want to send money or hopes that seller will send the good. Even in India, when we order something from our e-commerce site, we usually check them, and when they are coming, is the order shipped or not, when the actual date of delivery, everything we check. So in this case, seller and buyer both are in this hope that buyer will send the money. Obviously e-commerce, you can see the example in the e-commerce, they will give you the offer, then if you pay through the Google Pay through the Paytm, you will get cash back, you will get 14% off, you will get 10 rupees off. And if you are doing cash on delivery, they charge 10 rupees extra in the case of cash on delivery if you use your e-commerce sites in the India. So obviously you see that. Okay, so likewise this thing is same in the international trading. Seller hopes that buyer will send money first, and buyer thinks seller will send the goods first. So in this case, in this type of situation, if everyone thinks like that, in that case of international trading, then obviously there must be conflict, there must be loss in the case of international trading. So LC says I am there, you just do your business. LC says I am doing your promise, I am doing promise on the behalf of buyer, on the behalf of seller. seller have to show the documents. Okay, and it is like a trust between buyer and seller, as I told you already. So who are the person who involved in the LC? First one is buyer, who is also called importer, who is also called applicant, that request the LC from their bank. This buyer will say to their bank that issue a LC. Seller, who is also called exporter, who is also called beneficiary, they will receive the money if all the conditions are met here. Okay, if all the conditions are met here, then the seller will receive the money. Issuing bank, bank of the buyer. Suppose this is a bank of the buyer, bank is called issuing bank. So it is, if I can explain you in the help of diagram, this is buyer, which is also called importer, which is also called applicant. There is a seller, which is also called exporter, and we can say this is beneficiary. There is a bank of buyer, that is called issuer bank. There is a bank of seller, who is called advising bank, that checks the LC and informs the seller. There is confirming bank also, which adds its own promise to pay. For more safety, there is one more concept of confirming bank, negotiating bank, that basically pays the seller after checking all the documents, after checking all the conditions are satisfied or not. There is also reimbursing bank, that pays the negotiating confirming bank back, that everything is okay, then okay, payment will be proceeded. So these are the main parties who are involved in the letter of credit. Now, let's see about the types of letter of credit. There is first type, that is revocable LC. That is basically usually banned here and not used in the international trading, but in this changes are made without telling to the seller. So this thing leads to conflict obviously. So that's why this revocable LC is not used now in present situation. Irrevocable LC. This letter of credit can't be cancelled if all the parties are not agreed. Then this irrevocable LC is not cancelled. And one of the safest type of LC is this. Okay. Then if anything is not mentioned, so UCP 600 saying that you can assume that letter of credit is irrevocable. Irrevocable confirmed LC means here seller bank confirms that letter of credit is there, and then they promises to pay, that okay, payment will be done. And in this situation, this type of LC is suitable where the seller did not trust the buyer's country bank. They did not show their trust to the buyer's country bank. So in that case, there is a irrevocable confirmed LC where the seller's bank assures the seller that don't worry, your payment will be there. Then transferable LC, when the original seller transfers the LC to the second seller, which is called second beneficiary. If another seller comes in the situation, that seller is called second beneficiary. Like if a trader buying from a manufacturer and selling it to abroad, in that case, that is the situation of two sellers. Red clause LC, in suppose there is a seller in India, someone orders for a jet plane, okay, private jet plane, suppose. So seller will say, okay, I will manufacture jet plane for you, but I need some advance. So in this case, seller get the advance money to make the goods, to manufacturing the things. So that type of LC is called red clause LC. As the name is red clause LC, so this thing is basically written in red words. That means advance payment is done once all the documents are submitted. Then there is a green clause LC, which is usually same as red clause. It basically having the proof that goods are there in the warehouse, they will provide the goods, and they offers more security to the bank. Site LC, once the seller shows all the documents. Once the seller submits the documents, that seller will get the payment immediately. Okay. Using acceptance LC, once the LC is accepted, everything is verified, but the payment must be after 30 days, 60 days, 90 days. The tenure will be depend on that situation. And with this is also called documents against acceptance. Then there is a deferred LC. But if I say about the popular letter of credit, the popular letter of credit is irrevocable LC, and irrevocable confirmed LC, transferable LC. But for knowledge, we can revise these terms also. Deferred payment LC is similar to the usance LC, but here is no bill of exchange. Payment happens on a future date. Okay, payment will be done on the future date, and this thing is according to the agreement. Everything mentioned on the LC on the agreement, and everything done according to the agreement. Then there is a negotiation LC in which the nominated bank checks the document that everything is according to the conditions, everything according to the agreement. Then the payment will be there for the seller. Okay, back to back LC means this is basically used by the middleman or exporter if they want to buy the goods by using the original LC. Standby LC means they works like guarantee. If someone like buyer fails to pay or seller fails to ship, so seller can here claim the payment that buyer is not performing, buyer is not giving the payment. In that case, standby LC is saying I will give you the guarantee if the buyer fails to do the things, so I will pay you. Okay. Revolving LC is like used for regular deliveries, and this keeps refilling for each installment of shipment. Means if anything is there which needs the delivery at a limited or a specified time of period, so in that case a revolving LC is there, as the name is revolving, so the work is revolving here. So in this, refilling is important with every installment of shipment. In that case, refilling is important. Everything must be refilled again according to the shipment. Clear? uh, any problem is there, kindly you can ask in this chat box, so I will help you out with the situations. Okay, so keep asking, try to make the session interactive so I can understand your problem, I can solve your problem, and if you are understanding the things, you can also tell that everything is going good. So the thing is there, what is the meaning of this UCP 600? At the end, we know that this is uniform custom and practice for documentary credit. These rules are set by ICC, which is in Paris in 1999. Current version is UCP 600. After 6 revision, this is enacted from 1st of July 2007, and everyone is following the same rule at the worldwide level, because these rules are uniform for every country, for every type of international trade. So you can see some tricks are also given here. You can read them. Now, let's talk about the journey of an export letter of credit. So first, buyer is there who places a order, who wants to purchase a car from the uh, different country. So here, buyer obviously says that this is the purchase order. The order having all the terms and condition from manufacturing to shipping, everything is mentioned there. Exporter says, okay, I accepted your order. Exporter checks everything, everything is fine, then okay, I will confirm your order. Then this exporter will say, bring the letter of credit. Then buyer is saying to their advising bank, then please requesting for the letter of credit. Goes their bank, shares that I ordered a car from abroad, so that is the order copy, and I want the LC for in the name of exporter's name. Then buyer's bank issues the LC via SWIFT. And SWIFT, we know that in the previous chapter we already studied about the SWIFT, where are 11,000 banks are there who are connected with SWIFT, one of the important and crucial technology for the banks who are helping the banks in doing these types of checks, these type of situations. So banks check buyers, the creditness and approvals of the buyer, that is buyer is if buyer is importing the car from the abroad, is the buyer is financially stable, is the buyer is able to pay the amount, then bank checks everything. Then that LC is sent via SWIFT with a form MT 700 to exporters bank. Okay, then exporter bank advises the LC, they check the LC. Okay, they check that everything is authentic, everything is valid, everything is official. Then it shares with the exporter. See, this is the LC, everything is okay, everything seems good, you can continue with the order. Then exporters checks the LC that okay, everything is according to the order, everything is right, everything is official, everything is checked. Then that exporter starts manufacturing and prepares for shipment. Then goods ready, exporters files all the documents, shows all the documents, every bill, every type of form, because EDF form is there, export declaration form is there for the goods, but Softex form is for the software. Okay, every custom check is there, approval is there, data uploaded on the RBI EDPMS portal via EDI. Clear? So this is the process from the for an export letter of credit. Now they submit the document to the bank. Okay, who submit the bank, who submit the document to the bank? Exporter submits the original documents, everything, invoice, every AVP number, bills, everything they submitted to the bank. Then exporter sends copies to the buyers also. Okay, then bank scrutiny, and bank scrutiny means bank checks and document forwarding is done in this case. Exporters bank checks everything, they checks the conditions is according to the terms and conditions, and everything is valid, everything is legal. Then okay, document sent to the buyer bank that please give the payment now or acceptance for this LC. After that, buyer's bank say okay, I received that LC, they check everything, they check the documents, they check the necessary forms. Then buyer clears the goods, means after getting all the documents, after getting everything is okay, then buyer goes to the customs, completes all the formalities, done everything, provide everything, and take the goods to their home. Okay, and then at the end, and happy ending is there, exporter gets their money, they receives the payment, and they update the EDPMS and say everything is done properly at the end. Okay, so what is the action in this case? Buyer places order, buyer is in USA, exporter confirms order, exporter is India, buyer request LC here. So buyer, who is buyer here? That is the bank in this case. Then bank sends the LC. After that, exporter bank advises the LC. So you can see this is a summary in very quick points about this whole process. So that is a very big process. If you are going to import any car from import from abroad, so or sending anything in abroad, so you have to perform these rules and these regulations. So I hope is that clear to you. Now so you can see here LC, a trust between the banks like buyer and seller, and this trust basically a bank is the uh, is act like a trust man between buyer and seller. SWIFT, a very secure way for the banks to send any type of messages. EDPMS is a RBI's export tracking system. Okay, if the LC is signed, so the money will come fast. And if usance, so you have to pay until 30 days, 60 days, 90 days according to the agreement. Clear? Now, this is the process for export. Now there is a process for import also. Now in this case you are exporting the good. Now in this case let's learn about the process of import. India imports it from USA. So first, importer who is in India, that person will place the order. Okay, who is the buyer of India, that place the order with the US supplier and says that these are my terms and conditions and I want to place that order. Now US supplier will see the order and confirms the order. If everything is according to the uh, comfortability of the supplier, then they will confirms the order. Then Indian banks approaches Indian buyer approaches the bank. Bank checks that buyer is financially stable, sound, and able to pay for the goods, and credit worthiness is okay. Then in that case, they will say, okay, you issue the. I am issuing the LC. The bank is saying I will issue the LC via SWIFT code MT700. This is the code to the supplier bank that is in the USA. Then US bank says that the LC is okay, valid. You can see the process is same for everyone, but the condition is export or import. Two different people are there. Conditions are same. Whatever you as why conditions are same, because I told you LC conditions are uniform for everyone. So now US banks, like advising bank, will check the authenticity and then they will say to the supplier that everything is okay. Then supplier review the LC, that okay, I will check once that everything is okay or not, like supplier is saying that. So they that supplier will read everything, and if everything is okay, supplier will start the manufacturing. Once the suppliers clear goods with the US customs, then they hand over the goods to the carrier and gets the transport document, that okay, I am sending the goods, now give me the transport document. And in that case, export doc submitted. Okay, they send the original documents and declaration, whatever the declaration according to the US law, because they don't follow the Indian law, they have to follow the US law. After that, suppliers bank checks the things, everything, and then forward it to the Indian bank, and also send all the documents copies, whatever necessary, to the Indian importer for the preparation. Then importer bank will check everything. If everything is correct, everything is okay, then okay, the next proceed is there. Payment will be sent to the supplier, and funds are sent via MT202 to the Nostro account. Okay, and if usance LC is there, so the payment will be made on the due date. Then supplier will get the payment, and supplier's bank will get the payment, and supplier's bank releases the amount to the supplier. So now importer clears the goods, means they will fill the bills of entry, they customs verify all the documents, and everything will be uploaded on the IDPMS, that is also the RBI system, where all the import transactions are recorded. And at the end, again happy ending, importers bank, like authorized dealer bank, closes this LC, submitted all the documents, do all the entries in the IDPMS, that is import data processing and monitoring system, and close the entry that everything is happy at the end. Happy, seller is also happy, importer is also happy here. So this is the journey. So for better understanding what is the meaning of negotiating bank, if the supplier submits the documents to a bank and then checks and pays against the LC, this becomes the negotiating bank. Okay, who is confirming bank? If once the LC is confirmed, LC is okay, everything is okay, then confirming bank check that thing and doing the payment. Okay, so that is the quick summary table. You can read when you are doing revision, so you can check the summary table here. some memory tricks I here do. Like I told you, site LC means instant payment, users LC means due date payment, pay later. Swift is a secure messaging app. Nostro account means our money in their bank. Okay. Now the new concept is there, UCPDC. So I tried something new type of PPT making. I hope that you like this style. So I will continue this style in the next class also, because we are having 11 days journey of our capsule batch to conquer our BFM examination. Obviously, we will conquer that exam. So I hope that you like this style of PPT, short, concise and easy to remember with fun tricks and some types of easy examples, because I don't want to paste the things from the other resources and in complicated language, because at the end we all know, if I have my examination, so I always search for the short and concise things, so that will help in revising the things and that will stuck in my mind until the examination. So I hope that you like this thing. So please, if you having any type of doubt in that case, so please tell me. Okay, now let's move to the UCPDC. Okay, UCPDC is Uniform Custom Practices for Documentary Credit, and ICC said that this basically first created in 1933. I told you about the first revision, and then in 1951, near about six revisions are there. Seventh revision is UCP 600. After so many revisions, that UCP 600 is come on 1st of July 2007. Why UCP 600 was needed? Why we need this? Obviously everyone is now population is increasing, so obviously so many peoples are entered in international trading, so rules updation is necessary. As you can see now, the Instagram teen accounts are there for the teenagers, because Instagram knows that thing. Now teenagers will see the reels. Small childs are there who are watching the reels. I mean, they are creating the reels, so everywhere rules updation is there. So in UCP 600 there are updation of the rules, and 500 article, like UCP 500 had 49 articles which are very complex and very outdated. Or anybody, if they are in the international trade, they want easy things, so why they have to follow these 49 articles? In UCP 600 they include easy language so everyone can understand, and articles only 39 there, and maybe in the next revision they will provide only 20 or 15 articles. Okay, and this UCP 600 is according to the feedbacks of different countries. These 41 countries are there who give their feedback just to improve the UCP 600, just to include these things in UCP 600 and remove the other things from the 600 UCP 600. And in this, India is also there who is giving the feedback that please put these things in UCP 600. That's why UCP 600 is there with so many improvement and so many things. Okay, so what are the key features? Remember, UCP 600 means simple, short and smart. 1 to 5 article are telling about the definition, interpretations, independence of LC. 6 to 10 article telling about the availability, expiry, obligation of banks. 11 to 17 are there for nominated bank, compliant presentation. 18 is telling about the invoice only. 19 to 17 are telling about the transport documents. 28 is telling about the insurance documents. 29 to 33 drawing, any type of presentation. 34 to 37 they are telling about the disclaimers, and their 38 to 39 are for transfer and assignment. Clear? Now just a second. Now let's move to the next slide. What are the major changes are there in UCB 600? Everything must be clearly mentioned in the letter of credit. Nothing is assumed, no condition is pre-assumed, everything will be there in the letter of credit. Revocable credit concept is completely banned from this UCP 600. Only irrevocable credits are there. Okay. And this cannot be changed if everyone in the transaction who are included in the transaction they agree, they can't be changed. New definition are there for issuing bank, for nominated bank, for the confirming bank, for the beneficiary, presentation, presenter. Every new definition is there for these persons. Then deferred payment clarified means Article 7 and 8 saying that issuing or confirming bank have to pay. Even nominated bank prepared the things, issuing and confirming bank have to pay the payment. And for every transaction, for the whole transaction, document must be same for the seller, for the seller's bank, for the buyer, for the buyer's bank. No any type of changes, no type of alteration must be there in the document. And if seller accepts or uses the amended LC, so that means it will be accepted. Like seller is not saying anything related to the LC, that does not mean that the things are not accepted. If seller is not replying, is not raising any type of concern, that means seller accepts the LC. Okay. Now 5 days are there for checking all the documents, not 7 days are there. And also info in the documents need to does not need to be same word to word, means uh, everything must be in the documents clearly mentioned. That does not mean that the things are clearly according to the voice of the buyer and seller. Everything must be like everyone can understand the things. That basically the things should not be there that who raise the conflicts. And must be addresses means must be in the same country, means addresses match not required, like seller's address will be matched or buyer seller address matched, that does these things are not required. And bank only see the document, they are not talking to the buyer, they are not taking that seriously, uh, talking to the seller separately, they just follow the rules. If any document who is disparate, who is like document that is not clear, so in that case bank hold that document and wait for the seller or buyer. Then if nothing can happen, they will return the document. Okay. Now what is an original? See, original means confidential, original means something which having the official stamp, official signature. Okay. Then article 19 to 27 saying transport documents. Basically here charter can sign the documents, they does not require any type of clause in that case. Space means if signs are there, signature are there, official stamp is there, then it is okay. Not a very complex thing. For the transport documents, seller have to provide them these documents when they ship the goods. Insurance documents are also there. In insurance documents they have to mention the things that how much percent damage will be insured, how much percent type of goods insured under the case of insurance documents. Partial shipment means like if someone, suppose buyer buys anything from the abroad, from another country, and that seller will send the things in partial ways, like some part in one shipment, another part in second shipment. So in that case partial payments are allowed. Whatever the goods they receive, whatever the part they receive, they will pay for it, not for the whole good. And if LC is saying that make the payment in at one time, and this thing is not creating any issue, so they will pay the entire amount at once. But if LC is not mentioned that thing, so they will pay only for that good which they received. Okay. If the things are lost in transit, so in that case issuing bank have to pay. Okay. Force majeure, Article 36 is there. No grace period is there if the bank reopens. Means if LC expires, that means no payment. That basically saying that everything must be there on the specified time. That does not mean they seller will saying that I need some extension, or buyer is saying I need some extension. No, everything must be on the time. Transferable in the case of transferable credits, whoever the second beneficiary is there, that person, that seller have to provide the documents to the transferring bank. So who is the applicant? Who give the clear instructions to the for issuing the LC, that the LC must have to mention these things. So that person provide the instructions, and that person needs to provide only the necessary documents. Okay. Issuing bank, that is the importers bank. Basically importers bank act on the behalf of the buyer. They will check that buyer is able to support this transaction. They will check the credit worthiness of the buyer. They will paying for the at the site or at the maturity, whatever the type of the LC, and they ensure that LC is clear, and there is nothing mentioned which leads to the confusion. They will check all the documents. Like, who will check the document? Importers bank will check all the things. They will check everything in the 5 banking days, and they have to inform in 5 banking days if anything is missing from the documents. They have to confirm, they have to tell them, and they have to communicate in case of confusion, in case of default documents. Then what is the case of advising bank? Advising bank will inform the seller beneficiary about the LC. They have to tell the things. Okay, so advising bank is basically informs the seller, or they have to check the authenticity of the LC, that LC is okay. Then they will inform to the seller that I will receive the LC from the importer's bank. If everything is not okay, they will inform this thing to the issuing bank. And if they don't are not able to confirm the authenticity, so advising bank will contact the seller, will contact to the buyer, buyer's issuing bank, that this thing is not according to our conditions, so change them. Now, confirming bank, which is act as a guarantee between the buyer and seller, and if someone is refusing to pay or refusing to confirm the things, whatever at the end of buyer, at the end of seller, so they will notify the issuing bank, and they can forward the LC without any consent. They will forward that letter of credit to the issuing bank or the confirming bank or the advising bank, but they have to put the message to all the parties that they have forwarded the letter of credit. Clear? Now, what is negotiating bank works? They examine documents, that everything according to the rules and regulations, and they will raise the concern if the documents match the LC terms. If the concern raised from the negotiating bank, that means there is a problem, there is a problem in the documents. If everything is okay, they will negotiate the things. They have to follow the rules. They have to follow the international standard banking practices. We will study about this also. There is also reimbursing bank. that will pay the claiming bank after authorization, after checking that everything is okay, then the payment will be released. And these things are governed by URR 725 rules. We will check these rules also. So who are beneficiary? Beneficiary have to submit the documents according to the letter of credit. They cannot claim based on the buyer's bank contract. They can't claim anything according to the buyer or according to the buyer's document. They have to prepare their own documents, and they have to check the documents by the bank. So everything according to the LC, because LC is the one document, and every party must have to work according to these LCs. Okay, so what is the bank protection here? Now if in the case of this trade, if buyer fails to do payment or seller not shipping the goods, so in that case, how bank will protect themselves? They are not, the bank saying, according to the article 34 and 37, they are saying that we are not responsible for the genuineness of document. We are not responsible for if the message is not reached to the seller's bank or the buyer's end. They are not responsible for any type of translation error in the case of different languages. They are not responsible for any type of flood, any type of earthquake, any type of cyclone, any type of storm. They are not responsible. They are not responsible for the correspondent banking, which is chosen by bank or buyer. They are saying we are not responsible for that things. Or buyers buys the third party charges if this thing is not recovered. Buyer is only responsible for those losses if these losses are according to the foreign laws, because bank is not saying that you purchase the things from the abroad, you purchase these things from the abroad. This is the buyer willingness to buy the things from the abroad. So bank is only doing the things to make the transaction easy for buyer and seller. So bank is not saying, yeah, I am bearing all the losses if you are not getting the things of, or you are not giving the right documents. Bank is only acting like a middleman. Like in the marriages in India, we can see there are middlemen. They are not responsible for the divorce, or they are not responsible for any type of conflict between the groom and bride. They only they have the only one work. They will contact the groom and bride and make everything fixes, just like banks are there. Banks are not responsible for any type of damages, any type of miscommunication, any type of disaster. They're just doing the things on the behalf of buyer and seller benefits only. So what is bill of exchange? That is drawn by seller, and in the bill of exchange, LC number should be there, issuing bank name is there, and that bill of exchange must be according to the LC currency. That documentary, like bill of exchange, is corrected or authenticated if edited, means if any problem is there, so that bill of exchange can be edited or can be changed. Clear? So now let's move to the next slide. Okay, invoice. What is the meaning of invoice? In invoice, like if you are going to purchase anything from the Indian shops or even in online, you will get an invoice. That, in the case of international trading, this invoice is different. That invoice match all the terms of letter of credit. This invoice include applicant name, what are the goods, what are the nature of the goods, exact description should be there in the invoice, LC number, and also contract references should be there. Sale terms, FOB, CIF, we will learn about these terms also, should be there. Total value not more than the LC, like invoice is not greater than the value of LC. And here also weight of the goods and what are the packing, how the goods are packaged, these things are also mentioned in these invoices. Then what is the bill of lading? Proof that goods are shipped, that is bill of lading is for that goods are shipped, this is a proof. And every original and non-negotiable things must be completed. This bill of lading must be signed by the ship owner or the agent, and date should be there. Freight charges, weight, LC number, everything must be mentioned in this bill of lading. And uh, where that product will be shipped charges, shipping details, everything must be in the bill of lading. So now, foreign currency liability and crystallization. What is the meaning of crystallization? When the bank converts the foreign currency into the INR, that process is called crystallization. Like if US dollar converted into INR, that process is called crystallization. When it happens, in the case of sight bills, in the case of usance bill, in the case of uh, when the due date is given, that in that case this process is followed. And in this, bill selling rate is used, or agreed forward rate, like they, if they agreed in any rate, that rate must be included in the at the time of crystallization. So now you will get to know. Now I hope that now LC is clear to you, what is the meaning of LC and why bank need to safeguard. Because in the banks they uses the foreign currency, and obviously huge amounts is there, and fraud risk type loss situation must be there. So bank have to protect themselves, because in performing the LC, bank will bankrupt, so they will provide themselves first. So what are the checklist before sanctioning any LC? Genuine deal, well-known customers, they have to follow the KYC norms, verify the importer trade experience, be careful that there is 100% margin, credit report must be there, they know that their staff know about the forex laws and rules, document have to match the trade control and bank policy, everything according to the bank policy. They have to take approval. If transaction is beyond limits, then in that case RBI say that my approval is necessary, because obviously I am the apex bank. And they have to check every evidence of import, like bill of entry. So what are the common risks basically that is are there in the LC transaction? Like documents mismatched, there is a conflict between the goods quality, buyer will say that is not the good quality. Like recent case, if you say, if you see the Porsche case is there, Porsche case is, I don't know I am saying right, Porsche car is there. uh, Correct me if I am wrong and understand what I am trying to say. Porsche car case is there where a teenager hits the two peoples in the Maharashtra. They that teenager hit that two persons, because I think that teenager is in the drinking condition. So when that teenager caught by police, so why, what that teenager giving the explanation that the Porsche car is not enough or having some problems, that's why this accident happens. So these types of disputes are also there in the LC transactions. Legal issues are also there, court stay orders, like if something is imported from that country which is completely banned, or some country specific currency restrictions are there, and buyer not retiring the bill on time, or some restricted items are imported without proper license. So in this case these are the common risk in the LC transaction. That's why the proper check is required before importing or exporting anything. So what can importer and exporter can do? Importer, buyer have to check the credit rating, seller's credit rating. Like we are checking the reviews when we are ordering something. So buyer have to check the credit rating that the seller is genuine or not. They know what is the policy to buy the things from that country. Like some apps are also banned, like TikTok, Sheen, these apps are banned. Make sure that documents meet their needs. Okay, documents meet all the needs, and they have to book a forward contract to manage currency risk. Now exporter seller should, they have to send the documents according to the LC term. They have to dispatch the correct goods, that goods are good, goods must be of the good quality. They must be aware of the legal system in the buyer's country, that the what are the legal conditions in the buyer's country. They have to check everything. That is the responsibility of the exporter. Then ICP 98, rules for standby LC. I hope that you are enjoying the class. Okay, so let's continue. So here ICP 98, important, and this is basically international standby practices which comes in 1998. Here they have to follow the Indian law. Banking days, they must define the banking days. They have to notify if they are disordering the LC. They have to allow LC to be used in loan syndicates, means everything must be there, and LC must be used in the case of loans also. Reimbursement between banks, URR 15. See, if a bank A is there and that bank A ask bank B, please pay to the bank C. This issuing bank says to reimbursing bank, pay the claiming bank. So in this, issuing bank opens the LC, reimbursing bank pays on the behalf of issuing bank, claiming bank negotiate all the document and ask for the payment. So bank have to ensure that if reimbursing is there, so LC number must be there, amount must be there, bank name is there, and everything must be through the authenticated means like SWIFT. No expiry date must be there, and claim should be settled within 3 days only, 3 banking days. So LCR safe but needs some proper checking, and SBLC, standby letter of credit, as a backup tool, where because where guarantees are restricted, so this is helpful. And these rules are uh, same at global level. And bank and client, they have to follow these due diligence and trade laws, everything according to the checking, and the according to the laws. They have to do according to the policies, according to the rules, compliance, everything must be according to the rules and regulations. ISB 745, International Standard Banking Practices. So ISBP, that is stands for International Standard Banking Practice. This is a guidebook which is made by ICC, that basically helps banks in checking the documents which is submitted under letter of credit. See, this ISBP, it is a guidebook. ICC say that if I made the everything, that is very difficult to for the banks, for the importer and exporter to read all the things. So ICC say I made the ISBP. So banks have to check everything, that document submitted under the LC or not. They help the banks. ISBP is not a law. It helps the in telling about the USP 600 rule. This ISBP first published like a assistant of USP 600. This published in 2002. Then This is updated in 2007 and then again revised in 2013. And now the new name is there, ISBP 745, like iPhone 13, 14, 15, 16. So it reduces the confusion of the banks, also it minimizes rejection, and its main goal is there to make that everywhere the same rule must be followed while checking all the documents. They help the banks, they help the trades to avoid any type of mistakes and any type of problems. Why it is important? Because it is very fast and making the things easy for the importers, exporters, and also for the banks, because these three things are included in the LC, and it also ensures that documents are accepted smoothly, no delays are there, no losses are there. Now, one of the most important topic, Incoterms 2020 International Commercial Terms, and you will see in every previous year questions, you will see this Incoterms there. So what are Incoterms? As the name is very modern, Incoterm. So these are the rules. ICC again published them. ICC is doing very hard for the banks just to make everything smooth. So in these rules, basically they explains that who is responsible for the shipping, for the insurance, for the duties, for the risk, is any risk is there in the international trade. So they help basically for the buyers and for the sellers, so they can avoid any type of misunderstanding. Suppose these rules are not there, so buyer and seller will do conflicts, obviously. So Incoterms apply on the sale of goods, not on the transport contract. Latest version is Incoterm 2020. So there are some terms, departure terms, where buyer takes all the responsibilities from the seller's place. Departure term means here the buyer take all the responsibility from the seller's place. Their X work means buyer pick up the goods from the seller's factory. Main carriage paid. Now sellers pay for the major transport. Seller have to pay for the major transport. Like you can see, if we order something from Blinkit, from Jepto is not there, from Swiggy or from Zomato or from any app, Flipkart, so they will put the condition that except Meesho, 499 or 599, after that amount delivery is free. That means the seller is paying the amount. So first one is CFR, cost and freight. Here seller pays the freight, but buyer handles the insurance. Then CIF, cost, insurance, freight. Here seller pays the freight and insurance. CPT, seller pays until a certain place. CIP, same here, CPT plus insurance is there. Then main carriage unpaid, where the buyer take the responsibility. Here FCA, seller say I deliver the things to a carrier, to a transport company. Then FAS, good placed next to the ship. Then FOB, goods loaded onto the ship by the seller. Everything is there on the ship. Now it is the responsibility of the buyer. Arrival terms are there, where seller delivers goods to the buyer location. Like DAT, delivered at terminal. Goods are delivered at the terminal. DPU, where goods delivered and unloaded, means delivered at place unloaded. DDP, delivered duty paid. Seller paid all the cost, which is included all the customs. Now it is the responsibility of the buyer. Why these Incoterms matter? Obviously, they will avoid any type of confusion in the contract, and it decide that who pays for what type of term. There are very smooth flow of international shipment, and these used in trade agreement and the invoices. So you can see the chart here. Uh, See, seller, first carrier, along ship, you can see the transfer of risk. Now here the risk are transferred to the buyer. In this case, from this place the buyer obligation starts, and there are For different terms, it is given clearly that these things are delivered. These here the transfer of risk done. Here the seller's obligation ends and the buyer's obligation starts. So you can go through with this chart. I already explained you this chart. I hope that it is understandable to you, because I try to explain the things in easy way. So let me know that quickly that everything is cleared, because we are at the end of the letter of credit. So now I think our next chapter will start. Okay, let's move to the next slide. And one more thing I want to deliver, that from I made some changes in the schedule, because I don't think that one day before examination, uh, final marathon is very, type of a pressurized situation. So I made some changes. From tomorrow we are having PYQ session on YouTube, where we will discuss all the previous year questions with proper explanation at say 7 a.m. sharp. If you are not able to see at that time, please watch according to your comfortable timing. Then we are going to do final marathon. Some numerical sessions are there in between at 7 a.m. And then final marathon is there on Saturday and Sunday, where we will discuss all the things very quickly. And this will helps you, because examination is on 14th of June. So there is 1 week for you. We will revise the things very clearly. Okay, and then in the examination week we are practicing the MCQs. Okay, every MCQs which are very different. So be sure you are there, you are getting the PDF. Go through with the PDF, that is very helpful for you. And I upload the PDF with the answers. Okay, so please check the PDF and attend the class. So let's move to the next slide. Okay, in the India, who manages the foreign trade? DGFT. Now the DGFT makes the entry here. Who sets the policies, procedures for export and import? RBI is there. Who manages the foreign exchange, payment regulation and export financing via FEMA? FEDAI is there. That is a self-regulatory organization established in 1958 that helps the RBI in promoting the best practices for the foreign exchange market. FEMA, that governs all the foreign exchange transaction. FTP, which is issued by the DGFT, that how to proceed with trade and regulation. UCP 600, 522 and URDG 758 Incoterms 2020. These are the standards again by the ICC for trade documentation, collections and as well as guarantees are there. So RBI ensures that now everything is okay. We made the rules, we made the strict LCs, conditions, everything is okay. But there must be some facilities for the exporters and importer. At least they are importer and exporter. They are doing business. So obviously there are some facilities for them. So RBI ensures that exporters get loans at very low interest rate, so they can compete internationally. And importers are regulated that they have to protect the foreign exchange reserve. Obviously they have to encourage the advanced technology and a good competition. And DGFT and RBI say let's do collaboration and work together and see that what can be imported and how we can paid for that import things. IEC. IEC say just introduce me. I am importer exporter code. And who issues it? DGFT say I am issuing you. And why we need this IEC? Because it is a 10-digit unique code and it is required for any type of import export activity. Where to use this IEC? on the invoices, on the shipping document, on the custom form, everywhere IEC is required. And what are the additional registration? Exporters of services and software exporters. Like here we need EDF form and Softex form. EDF form is for the goods and Softex form is for the software exports. So EDF and Softex for all the physical exports, Softex is for all the software exports. So exporters have to ensure that they know what is the full value of the goods in the foreign exchange within the prescribed time, within the specified time. So who is exempted from filling the export declaration form? Who is exempted? Who is not required to fill that export declaration form? So if gifts are there for 5 lakh, so this is very small value and non-commercial. If there are some goods who need repair, so in that case we can say there is a temporary export. Like if something is in trouble, so that is not required any type of form. If there are some personal items of the travelers, so that thing is not commercial also. If there is some military items, so this thing is related to the government and military related, and who have that dareness that they will say to the government, fill the export declaration form, so that is exempted. If any defective import is there, and this import must be replaced, so that is also exempted from filling the export declaration form. Software parks or re-export for production and testing, so that is also exempted. Aircraft parts, so these things must be imported in 6 months, so that is also exempted. Free samples are there for publicity items, so these are promotional, obviously these are also not these are also exempted from export declaration form. But some exemptions need the approval from the authorized dealers or DGFT. Now what is the workflow of EDF? How the EDF have to work? They have to prepare the shipping bill with the EDF form. They have to submit it to the custom. They have to verify it, return the exchange control copy to the exporter. They have to submit it to the authorized dealer bank. They have to track that everything is according to the FEMA. Every foreign exchange is tracked that the source of funds are good and everything is legal. Everything is according to the FEMA. Then what are the time limits for the export procedures? See, export documents plus EDF, they must be submitted within 21 days from the export date and software certification. And if the regions are not, if the extension is required for more than 21 days, so AD will see the what is the reason. If the reason is genuine, then the authorized dealer will accept that. Okay. And if the any money which is needed to bring in the India, so in that case 9 months time is given from the export date. And then what are the methods of receiving the payments? Obviously crediting to the nostro account, inward remittance, bank draft, foreign currency note, traveler check, payment from the FCNR NRE account, international credit card, INR payment from Nepal and Bhutan. INR payment is accepted money in Indian rupees. Also gold, silver, platinum. This is also the method of receiving the payment. So all these things must be in the eyes of authorized dealer, except in special cases, because special cases requires the approval of the RBI. In that case authorized dealer will not be there to approve the thing, because at the end RBI is the apex bank. Now some special country mechanism also there, like Asian Clearing Union, Bangladesh, Bhutan, Myanmar, Iran, Sri Lanka, Maldives, Nepal, Pakistan, India. These are the countries, and these uses the ACU dollar, ACU euro, ACU yen for the settlement. Nepal is a ACU member, but this is exempted from the ACU system. And in Iran, payment is freely convertible according to the RBI direction. Some of the export benefits and adjustment, suppose agency commission, like if everything is declared in the forms or reasons must be justified, so it is allowed. Invoice reduction means up to 25% is allowed, and if exporter has 3+ year good track record, so no limit is there for them. And claim allowed if payment was like claim is there, claim can be made. Refunds allowed if the goods are re-imported, and proof of no incentives claim is showed. Means they want to say these are the facilities which are available for the exporters and for the importers, and these facilities are basically for the exporters. Then EDPMS. EDPMS is one of the portal which is launched on 1st of March 2014, and who launched it? RBI. It is like a diary where all the export related transactions are recorded here. Very simple to filing the things, very easy to monitor the bills and any delays. It also catches the exporters who are in the case of default. Bank here send the export data to their branches. Branches follow up with exporters. Also, caution list will be created here. Who are the risky exporters? Bank record advance payment also for the export in the EDPMS. XOS reporting is discontinued. Once this EDPMS is there, XOS reporting is discontinued. Then IDPMS, if there is a portal for exporters, so obviously equality is there. So portal for importers also. It is a brother of IDPMS because it tracks bill of entry. It tracks that the timely payment and reporting is done. Fake imports prevention is there, and time limit for import payment is 6 months from the shipment date. In the COVID time, there is a 12 months because of the COVID, and AD give authorized dealer will show mercy on the importers. They will give the 3 months extension. If the reason is justified, then the 3 months extension will be there for the importers. Clear? I hope that the things are clear to you. Let's move to the next one. Okay, now factoring. Sell now, collect later. That is factoring. Like if you are selling the goods and don't want to wait for the buyer payment, so that is the concept of factoring. You are so heartful and you want to sell your goods, you don't wait for the payment, then factoring is there. You sell your unpaid voices as a factor. You will get 70-80% as upfront. Factor here collects the money from your buyer. Services are there. Buyer financial stability will be checked. Also, if buyer defaults, in that case, credit protection is there. Single factor means there is the same companies in both the countries. Two factor means export and import factors will be considered. Direct exporter import financing is there. What is the forfeiting means? Export now, get 100% money and forget about any type of risk. For medium term exports, like any machinery export, project exports, any type of things which are related to the medium type of export, so forfeiting give full cash in the advance. So exporter get the buyer acceptance that payment is done, then financer buys the bill at a discount. No worries is there if the buyer defaults because risk is already passed to the forfeiter. Now this is the financer responsibility to get the money. 100% cash will be there. No need for any type of insurance. Obviously there is a peace of mind for any type of risk. Now, what are the guidelines for the importers? Importers must have this IEC code. They have to check that the goods are legal or not according to the foreign trade policy. And authorized dealer banks are only the channels who will do the things related to the payment. 6 months of shipment is the deadline for payment for imports, and up to 2 lakh $2 lakh simple approval is there, but more than this board approved policy must have to follow, and more than $5 million RBI approval required. Bill of entry must be provided here, and bank will chase for 3 months if bill of entry is not provided. Big companies can submit this uh, CEO auditor certificate if the amount is more than $1 million. Now, what is the meaning of ECB? External commercial borrowing. Loans are there. Who giving these loans? Indian companies from the foreign sources in foreign currency or Indian rupees. Means this is a type of medium or long term borrowing, usually for 3 years or more. Who can borrow? Who can get these money? Who are the eligible borrowers? Companies that allow that they can receive the foreign direct investment. Central government recognizes the startups, they will raise the money, they will get the money, they will get the loan. Some port trust units in the special economic zone, SEBI, Exim Bank, they are eligible to get the loan. Some entities like who are not there for and not for profit, some societies, some trust, some corporations, they can also receive the money. ECB funds cannot be used for, obviously again same as the LRS, for the investing in the, like taking the loan and investing in the real estate business, stock market investment, equity investment, working capital, general business exposures, and paying back the rupee loans, lending to others for any of the activities that is related to this. These things are not eligible under the ECB. Like ECB funds can't be used for these purposes. Who can lend? Who can give the money? Obviously, the country who is FATF and IOSCO, means FATF country, that who is taking the responsibility that the money is not used for any type of terrorism activity or for money laundering. Multilateral financial institution where India must be a member. Only those individuals who are foreign equity holders or who are invested in the bonds who are listed overseas. Okay, and foreign branches of Indian banks, they can lend. And what is the maturity average minimum period, minimum average maturity period? 3 years for the startups company. Manufacturing companies, it is for 1 year for the manufacturing companies, and for general purposes it is for 10 years. For loan repayment it is for 7 years. For loan repayment non-capex it is for 10 years. Means here we can say, like, this is these minimum average maturity is for the different types. It depends on the different types of situations. So here, just that capex means we can say capital expenditure, or non-capex is non-capital expenditure. Capital expenditure means money that is spent on the assets, or basically for the benefit of the entity. Okay, so that is the capex version. So make sure that this term is clear to you. Now, all in cost ceiling means there is a benchmark rate for the new ECBs, that is benchmark rate plus 500 basis point value. And then ECB, who are having the LIBOR to ARR shift, that is 500 BPS with benchmark. And in INR ECB, benchmark plus 400 BPS means fees, expenses, guarantee fees, ECA charges. These things are excluded in this. So we can say in easy terms, ECB are the loans which are taken by the Indian companies. Suppose uh, any Indian company, uh, any Indian company who taking the foreign sources, who take the loan from the foreign sources in the foreign currency or Indian rupees. Like any Indian company, in my mind is still not coming any type of company. There is a television that is Blu-ray type of television name. Just imagine there is a company in the India who is taking the foreign who is taking the loan from the foreign sources in the foreign currency or in Indian rupees. That is the ECB. So what are the types of ECB? FCY denominated ESB means freely convertible currency, and uh, INR denominated ECB in Indian rupees. Okay, like must Indian rupees. And who can borrow? The companies who are eligible for the FDI, recognized startups are there, port, trust, unit in special economic zone, SIDBI, Exim banks, they can borrow. Registered NGOs who are doing the microfinance, like small type of finance, they can borrow that loan. Clear? Okay, let's move. So where you can use this ECB? Where you can't use it? In the real estate, in investing in stock, the same thing is there. Where you can't use the ECB funds, who can lend? I told you this thing also. Minimum time is there. Some rules are also there that ECB currency can change freely anywhere, and they have to protect the currency risk from the day one. Startup can borrow the 3 million and others can borrow up to US dollar 750 billion. What are the reporting requirement? LRN number must be, they have to get, report monthly in the ECB2 return within 7 working days. Pay late submission fees 5,000 to 1 lakh. There is a late submission fees. New ECB has lower cost. No reduction is there in the average maturity. Means that does not mean 3 years will become 4 years. No. And triple A rated company or any Maharatna Navratna companies are allowed for refinancing the ECB. Like they can refinance the ECB loans, they can refinance. Then this thing allowed under the FDI automatic route. They have to follow the pricing and some sectoral cap rules. And some of the FDI sectors which are prohibited, like you can't use that money for lottery, gambling, chit funds, real estate, tobacco related, and sectors like atomic energy and railways. So there are some pledge of shares by foreign investors. Pledge to an Indian bank means PROI holds the share in an Indian company. Purpose to help the Indian company just to get the credit. Condition only genuine businesses must be entertained. They have to submit a auditor certificate uh, that have to tell about the how they can use the loan, for what purposes they are going to use that loan. Okay. And if there is a pledge for the overseas bank, so PROI hold the shares in an Indian company. What are the purpose? To get the loan for promoter or group company abroad. Loan only from the overseas bank. They must be from a genuine business use. Obviously, they have to use the money for the genuine business, genuine region. And auditor certificate is there to confirm that everything is according to the rules and regulations. Okay, so if you want to involve any foreign investment, so what type of document you need? Application or obviously declaration from the FEMA, company profile, or there is a code, NIC code, memorandum of association of the Indian company, share agreement is there, must be there, Swift 6 point format like know your customer type of certificate, and declaration that share will be issued with in 16 days, and some other documents which requires will be filled in 30 days. And if you want to outward like sending money abroad, so in that case application needed, form A2 needed, FIRC is needed, letter for refund region, board resolution, and no interest on refund is there. Bank have to perform the RBI also about the refund. So these are the things in the facilities for the importers and exporters chapter. Your ECB, your documentary letter of credit, and your facilities for exports and importers completed. Now tomorrow we are going to complete fourth chapter at the same time 7 p.m. where we will discuss about these four chapters theory, and for PYQs, join 7 a.m. YouTube English channel where we will discuss all the PYQs of BFM, which is very helpful. Then we are going to do module wise numerical. I am not included numerical here because there you will get the genuine numericals with great practice. For A module we have a different separate session, for B we are having the separate session, for C and D we are having a single session. Then for 3 days this thing is going on. Then on Saturday we are having the final marathon part 1 where we will discuss the things, then final marathon part 2 on Sunday. Then again we are going to discuss everything related to the chapters, and apart from this then we have 4 day schedule in which we are discussing only the MCQs. These MCQs are not from the Macmillan, not from the previous year question, not from the any other resource. These are completely new uh, MCQs which helps you obviously in your more brushing up the concepts. So that is all about for today. I hope that it helps you in understanding the things clearly. So please kindly tell me that if there is any doubt, any problem, so let me know so I can understand the thing, and let me know in the comment section if everything is okay. So please give a thumbs up. So that is okay for today. Or I will upload the PDF also in the class. So make sure just go through with the PDF. This PDF is enough because I include everything, because you know that nowadays this IIBF is playing games. So we can say everything is important. So thank you everyone. And if you like the class, kindly give the feedback and the rating. So thank you so much. Let's meet tomorrow. Till then, take care everyone and have a good day on. Thank you everyone.